Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi everyone, how are you going? Thanks for joining us on the podcast today. And I just wanted to use this opportunity to really do a bit of a deep dive into getting a greater understanding and appreciation of what's happening right now for landlords right across the nation. If you've been tuning into this podcast for the number of years that we've been doing it, you know I've been very open in how I share all the information about the Smart Property Investment property portfolio. In many ways, that was one of the reasons why we decided to create the brand when we launched it nearly a decade ago. And I enjoy telling those stories, warts and all, of how we've been going as a property investor. And like all investors right now, we are keeping a very close eye on what is going on in terms of government intervention, whether it's federal or whether it's state, in terms of how landlords need to act and operate considering the COVID-19 pandemic. It feels like it's changing every other day. You know, I work in this sector and I sometimes get confused about exactly what it means, what's going on, what my requirements are as a property investor or a landlord, but then also how I can ensure that I can best navigate through this period of time. So what we chat about right now might be out of date in a day's time or a week's time, who knows, because it is a very fluid environment right now. And, you know, some of my criticisms might be that, yes, the governments, and I say by governments, the federal government, the Morrison government, followed by the state governments, were quick to try and implement a policy around this, but some of it may have been a bit light on detail. So we're starting to get the detail now, and we'll keep reporting that on smartpropertyinvestment.com.au as we find out what's going on. So stay tuned. If you're not yet following us, whether it's social media or Smart Property HQ for headquarters, you can do that there so you're the first to know what's going on, or you can subscribe to our daily morning newsletter so the first to know what's happening in property investment right across the nation. smartpropertyinvestment.com.au/subscribe. But we're going to have a bit of a chat about this today. I've asked to come to the studio Paul Glossop. He's a regular guest onto the Smart Property Investment Show. He's the director of Pure Property Investment. We're going to get stuck into this. Paul, how you going, mate? You well?
Yeah, very well, mate. And thanks for having me again. I think there's some pretty key topics. I know we're usually quite lighthearted on this, but I think there's some pretty key topics here that we can cover today to hopefully give all the listeners a bit more brevity, whether you're an active investor or someone considering buying your first investment. I think there's going to be a lot out of this podcast that you can take heed to and make sure you can action and hopefully get a better outcome for cash flow and also for growth over the next 3-6 months and beyond.
Yeah, and look, as an asset class, you know, property is a strong one. It has been over many, many years. It is challenged right now. So whether or not it's a good time to invest in property, you know, we'll have a chat about that towards the back end of the podcast. Paul, I imagine your messaging would be, if you can afford to get into property, you should get into property, but are we going to see wholesale reductions in property prices over this period of time, considering some of the pressures that landlords might face and some of the other dynamics around the rental markets? And I only read the other day that, I can't remember the number, maybe 300,000 people have left Australia, negative migration back to where their original place of residence was, and a lot of it based on, you know, changes to working requirements and working visas and stuff. So there's a lot of moving parts right now, and the best investors I know are those that navigated this as effectively as possible. So hopefully, Paul, some of the stuff we chat about today can help investors. I don't want to go too heavy on the detail because it's changing so quickly. You can check out smartpropertyinvestment.com.au for update stuff on every single property market in Australia, particularly what the state governments are doing. And I think, Paul, we can probably chat at a federal level, but just to kick off this chat, the REIQ, so that's the Real Estate Institute of Queensland. So for those of you who don't know, each of the states have their own body that represents real estate. REIQ is the one for Queensland, and then there is a national body as well, which is a wider conglomerate of all of those different state-based bodies, but it is largely fragmented as well. I'll probably discuss it for another time, but an open letter a couple of days ago coming out from, I think it was their CEO, talking about the potential changes in Queensland should some legislation get passed through up there. And just headline, Paul, some of this stuff is pretty alarming, right? Your tenant will not have to pay back any rent to you. You cannot ask your tenant for any proof of financial hardship. Your landlord insurance will not cover you for rent in arrears. your tenancy agreement will immediately extend by 6 months if it expires during a 6-month freeze on evictions. Your tenants can refuse entry for anything other than emergency repairs, and your tenants can break a lease with only 7 days notice. It seems pretty one-sided.
Yeah, look, when you read the headlines and basically the 6 main bolded points for the REIQ in itself in particular, I take it with a grain of salt, and I'm fully aware that the REIQ's stance on this is making sure that they're dragging out the absolute worst case scenarios here. And there are some points in there which are quite difficult to fathom if you're an investor and you've got a tenant or a property with a tenant in place, or even a property that's vacant, and considering, well, there's potentially a lot of scenarios here that can play out, which are going to be not necessarily favourable for any investor. However, I think what the intention with this open letter, which essentially is taking into account every scenario that can possibly play out that's been presented to the Senate for vote as of Wednesday, the 22nd of April, which, as we're recording this podcast, will be next week, is to try and make sure that everyone's seeing the reality of making sure that whatever's going to be passed is a balanced view here. Because what we don't want, and what no one will want, and that most certainly will include the Queensland government, is for landlords to then therefore be put under stress. And I know that what the other big backing for these proposed changes, or the opposers for these proposed changes, are is certainly the banks, because the banks are obviously looking at this saying, well, they're looking at it to be most certainly not a good situation for any landlords for a short period of time if any of these were to come into effect. So it's trying to make sure that there is full visibility of what this actually means financially, but also then to provide the balanced view on what actually has already been put on offer, and making sure that, I think, tenants, and this is probably the point here that the REIQ maybe has some responsibility, and the REIA for that matter has a responsibility to be able to provide, is the information to the property management companies out there to then provide that information to their tenants about what the JobKeeper and job seeker allowances are, to then ensure that tenants themselves know that they've got access to funding if they're hitting any financial hardship themselves. Because this is most certainly going to be, as you said at the intro, Phil, something that's going to take a lot of navigating. There is no textbook or no study or no qualifications that prepare anyone for what's happened over the last 2 or 3 months, and what will be probably the case for the next 2, 3, 4, 5, 6 months as well. So making sure that all these different parties are working together, that landlords know what they're in for, tenants know what they're in for, as well as what they've got on offer, to ensure that everyone's getting through the next end of this next 2 to 6 month downturn, to make sure that rents are being paid, mortgages are being paid, and ultimately properties are staying tenanted throughout that whole period.
Yeah, and I'm already starting to see little hints, and we've had a couple of people, or my property managers, sort of say, hey, look, this person's lost their job, watch this space. Some people who are moving out of some of the, like, we're losing people, so we're trying to, get people back into these places. And maybe we're going to have a chat about that a little bit later on, Paul, about pricing strategies for setting your rents during this period of time, rather than trying and get the biggest price. You just get someone in there. But my concerns with this, and you'll see, this is in many ways, the dichotomy between the federal government versus the roles and responsibilities of the state governments. Now, you look what's going on in New South Wales. The minister stands up and he sort of says, hey, look, we want to help out landlords. All the banks are giving this rent-free period and it won't impact your credit report and all this sort of stuff. That's fair enough, whatever. But looking to give breaks to landlords on land tax, right? Saying that's how they've positioned their policy. And that's all well and good, but not every property investor pays land tax.
Well, I think from my assessment, it's just a tick over 15% of all property investors across Australia actually encroach land tax thresholds. So, you've got essentially 85% of property investors who own 1 or 2 properties, which basically reflects on where that ownership sits, is that they're the ones who this affects nothing. I mean, land tax doesn't mean anything to them and potentially never will. So, they've got to think about policies that actually have a meaningful impact.
Yeah, and the New South Wales response seems a little bit more reasonable to what you're seeing up in Queensland, but I'm obviously viewing that through the prism of being a landlord, right? I acknowledge, and I'm very considerate of the plight of many Australians who are facing or have gone into unemployment, and it's a horrific situation for many, many people. And I'm very considerate of that. Nevertheless, federal intervention has been by and large around ensuring that, number one, businesses are incentivized to keep Australians in jobs through this JobKeeper allowance. And for those Australians who unfortunately are made unemployed, that there is access to that funding via the usual channels, right? Which has been increased. So that's all well and good. But this still comes down to the responsibility of the tenant and good fiscal management, right? How many households are going to have both people losing their income? Point number one. Point number two, how else are they managing their costs? Point number three, how else are they managing their finances, and what other debt do they have? And should the property investor be the end of the chain? Should everyone else get paid first before the landlord? And this is the discussion that needs to take place. And I think some of the policies coming out, and I look at this thing from this REIQ open letter from the Queensland government, the landlord is taking all the risk and taking all the heat. It's mitigating most of the responsibility from everyone else involved in this process. That's a bit hard line, but that's the view.
It is, and I think that's probably the way this is reading, and I think it really does need to, hopefully, what the REIQ stance here is to make sure that everyone within this industry in Queensland and anyone who's got any kind of interest in Queensland make sure that their voice is heard to the Palaszczuk government before any of this is gazetted and potentially enforced. And I mean, the raw facts of the numbers are that if we look at averages, the average rent in Australia hovers around about $430 to $440 per week. That's your average. It's a bit more for capital cities, a bit less for regional towns. But if you aggregate that and you look at the average, we're talking $430 to $440 a week. Now, if you're in a position where ultimately you've got a household where you've got, let's say hypothetically, worst case scenario, you've got two people who are gainfully employed, flying along, had plenty of surplus cash flow, and then the next day they both were made redundant or potentially have been told that they're no longer needed at work but go into the job keeper allowance. Essentially, that's $750 gross per person per week, so $1,500 per week that they're able to attain. And if they weren't working in the first place, they go into the job seeker allowance, which has now been doubled from $550 a fortnight to $1,100 per fortnight per person, with the means test increased from $48,000 to just below $80,000 per household. So in short, the same scenario, if you've got two people who were already unemployed and renting, they're now getting a minimum of $1,100 cash after tax per week. So if you do the math on that, if you've got $1,100 to $1,200 after tax coming in a household for people who've been affected, and you've got an average rent of $430, $440 a week, that's about $700 surplus per week per household that they should have, irrespective of what's happened here. So if I look at what the national government's response is, it's actually been quite good for landlords and for tenants alike. So it really should put vast majority of people in a position where they should say it should be business as usual. There shouldn't be any reason why you can't factor in an extra $100 surplus per day ongoing for the next 6 months, guaranteed. And that's the part which I think the property managers have a very, very important piece to play in this puzzle, is the fact that they need to educate their tenants. If they're coming to them saying they're under financial hardship, their job is to then guide them and circumvent the issues and say, well, you need to make sure that you're speaking to your employer about the job keeper, or you need to go and speak to Centrelink about the job seeker allowance, because based on those numbers, you should have surplus cash flow of X. And if I've just done some quick calculations, they're still only about 30% of their total income, if they're on either the job keeper or the job seeker, is actually going to their actual rental requirement, which if you look at the long-term averages, that's actually below the actual means test of what a normal property manager would do. If they're looking at the income of an applicant for a new tenant, they're usually a cut-off of about 35% of their income. Anything above that, they say, they might struggle to make ends meet with that rent. So based on these numbers, on the averages, they should be hitting those numbers. So this is the role of the property manager right now.
Yeah, I think that's really important. Let's go to a quick break, Paul. I'm going to come back and I want to chat about that and what you should be expecting from your property manager. Back in a moment.
Love property? The current Buyer's Agent of the Year and Director of Pure Property Investment, Paul Glossop, does too. And right now, he's offering you the chance to secure his best-selling book, A Surfer's Guide to Property Investing, absolutely free. Simply jump on Pure Property Investment's Facebook page, hit the message button and type Smart Property to claim your free book today.
Welcome back, everyone. Phil Tarrant. I'm here with Paul Glossop, Managing Director of Pure Property Investment. We're chatting all things COVID-19, tenant and landlord related is our focus today. Now, Paul, before we enter the break, we're chatting about the role of the property manager. Now, for those people who don't use a property manager, they're going to have to be thinking and acting and behaving and be informed as good as a property manager is during this period of time. Point number one. But let's chat about property managers and your expectations around them. Now, I've seen some correspondence and communication coming out of property managers would feel to me that they are operating on behalf of the tenant rather than on behalf of the landlord. Now, let's remember who pays the property manager's bill. It's the landlord. They provide a service and they get a percentage of the rent in order to do that. They act for you, and therefore they should be acting in your best interest. What are you seeing and hearing from your client base around this? It feels to me that some property managers steering tenants towards not having to pay their rent.
Yeah, look, I mean, that is a very, if anyone's hearing that from their own property managers, it's a very discouraging thing, I think, ultimately. But that is, I think this is truly a litmus test for anyone who does have a property manager or is potentially self-managing their own investments, is that your property manager ultimately is paid by you as the landlord. You are their client. So you need to make sure that if they're not pulling up their end of the bargaining agreement here, that they're reminded of that pretty frankly. But realistically, this is their role right now, is they need to be on the front foot. They need to be providing that information. And they also need to ensure that they know who is going to be their client at the end of the day. So retention of a tenant's obviously important. And as a property manager, selfishly, or as an owner of a property management company, selfishly, they know that if there is no rent, they don't get their percentage of that rent. So they want to keep a tenant in place, but they've got to balance that with keeping their landlord happy as well. But when it comes down to it, if you've got that inkling that you're getting the pushback from your property manager to think that, oh, look, let's just think about giving them a rent holiday or a subsidised rent, you've got to think about what the long-term ramifications are of that. And then I think this open letter to the Palaszczuk government from REIQ is a perfect example of the fact that there is no recourse if you do look at providing a rent holiday or some sort of discount to that rent, to then increase it, or then to try and say, well, how can you recoup any of those lost incomes from that period of time you give them that holiday? It's going to be nigh on impossible. So ensuring that they're not just taking the easy way out and making sure that they're educating that tenant and helping them, not just educating them, helping them get to that point of getting that income back in place is the absolute vital step. And I'd reinforce that to anyone who's got a property or multiple properties, to get in touch with their property manager, have that discussion with them, ask them what their plan of action is in regards to how are they communicating this to their tenants, and making sure that they're working with you as the landlord to get the outcome, to keep the tenant in place, to keep them paying rent, and ideally to keep them happy and sheltered. I mean, this is what we're providing. We're providing shelter as an investor, and that shelter is provided to a safe and habitable household. So we want to make sure that that ecosystem, that environment is done, and you're protecting your own investment. That's keeping your tenant happy, because I'm not interested personally, as a similar to yourself, mate, a multi-property investor, to see vacancy now or ever. So I want to work with my tenants, and I want to work with my property managers to get a solution that's not just the 3 or 6 month one, but it's a 12, 24, 36, 5-year plan. So I don't see turnover. I don't want people out of property. I don't want people out in the streets, and I don't want to find new tenants. That's not what I'm after either.
It's a real hassle. The issue I have with all this, and I completely agree with all your sentiments there, Paul, and it is a real privilege as a landlord to be able to be providing people shelter and a safe house and a home and a place to build their lives. So that's a really cool thing. But putting that aside, and some of this, a lot of this gets hijacked by the media and certain parts of the media, and not this part of the media. I think some people would say that we obviously have an agenda and a bias here, and I get that. This is a podcast for property investors, right? Of course, we're going to be advocating property investors. And I'd like to point out some people who are doing a great job at the moment in regards to this. Yourself, Paul, you're very active, connecting, communicating for people across your social channels. You're on Instagram and Facebook are the primary ones.
I'm trying to put out as many updated videos as possible. So whenever we see updates, we're most certainly going to put those out, both on Pure Property Investments Facebook page, our Instagram page, as well as LinkedIn. So if you haven't subscribed, or any listeners want to have a look at that, I'm trying to put out probably a video every day or two at the moment, because there is that much information coming out. And that's right across the residential and commercial space, as well as for owner-occupiers. I think there's other things here to consider, which is a different discussion altogether. But yeah, most certainly putting out information as it comes.
Yeah. And, go and check that out. I've seen Paul's stuff. It's good. I'd also acknowledge Ben Kingsley, who's the chairman of PICA, the Property Investors Council of Australia. He's been very vocal and active. He's also comes on the show a fair bit. He has his podcast, The Property Couch, which is another very good show. But he's been on the telly a lot, advocating property investors as well. So he's right across this. So there is a lot of people as part of this community who are being active and vocal. Just be careful who you listen to make sure you're getting the right information. But the media in many ways just sensationalized this. And I'm not talking about the property investment media. I'm talking about sort of more broader media, some of the more tabloid media where, you've got this sort of groundswell of, change.org idiots, I'm going to call them, who are out there advocating that it's rent-free for all Australians. Like, do these morons not understand how an economy works?
Oh, this is it. I mean, I'm personally from a very humble upbringing, similar to yourself, Phil, where I'm not going to go crow, woe is me, or foul. But in any situation, what I do think is that if you're worried about your situation, you're worried about the current circumstances, and you have been affected financially, the beauty, and this has probably been one of the biggest testing things that I've seen we're going to come out of in a far better situation, is that we have both a federal and a state position from a government perspective, both financially and also from a health perspective, which is giving us far more protection and cover than what we probably realised we actually had. So that is the thing here, is that if people want to go out there and claim that everyone should be ultimately not having to pay rent and there should be a moratorium on rents or any kind of evictions, etc., I definitely agree that the moratorium on evictions under most circumstances makes complete sense, and I'm all for it. But there is absolutely no reason, based on the early actions of the federal government from the income that every household can access, both whether they were affected and unemployed or already unemployed, that the majority of Australians, and I'm talking the vast majority, 95% plus, should not be in any way, shape or form in a position where they shouldn't be able to afford what housing they were paying for prior to anything happening from March onwards. So this is the position that we're taking. I think it goes back to, if anyone's giving you pushback, we need to go back to that original understanding of, have they accessed the job keeper? Have they accessed the job seeker? And if they have, and it's still a problematic position, then have you discussed with your bank about the potential 6-month mortgage freeze and looking at other things as an investor or as a landlord yourself, things that you can do to maybe protect yourself. And I think also the discussion with your broker, as well as with your buyer's agent or property investment advisor, if you have any of those people on your team, this is where their job is now, to really reinforce what you can do and different steps you can take, because there are multiple levers to pull. And this is the beauty about our situation. It is not just a yes or no situation or a doomsday or a grass is greener on the other side situation. There are so many different levers that should be accessed if you're in any kind of hardship or have any questions.
Yeah, and sort of around my point that a lot of people have framed their perceptions about, if they're a tenant, what's available to them from some of the more, let's say, left-leaning media. And that's got to shape how they're approaching it. And people are being opportunistic and trying to be and gain advantage from this. And that's unnecessary in many ways. And I'm going to call it's un-Australian, which is the great Australian term, being called un-Australian. But, like people who generally are under stress, fair enough, sort them out. But trust your instincts, as a landlord. If something doesn't smell right, if someone just looks like they're trying to take advantage, push back the right way. You've got to be considerate and concerning, and there's ways to do it. And you should be using your property manager to be, that buttress between you and directly with the tenant. Don't get stuck having emotional conversations with tenants, right? Use your property manager if you have them, but you've got to trust your instincts on this. And if someone is genuinely distressed and under considerable stress or pressure around it, consider the options to give them a bit of a hand. But don't let opportunistic people take the piss as well.
Yeah, but I couldn't agree with you more. And probably the other thing that I think this is going to raise, as property investors who are around before this and property investors who are going to be around after this, and remembering that this is very, very temporary. And I think that's one thing we have to keep reminding ourselves of here, is that in all reality, it is very temporary. This isn't the new norm. This is very temporary, and this is a very short period of time. So whatever's happening now, make sure everyone's reminding themselves that this is probably somewhere between a 3 and 6 month time frame, potentially a bit longer, potentially a bit shorter in certain states, which by the sounds of things, we might see a little bit more of a bringing forward rather than a pushing back of lockdown laws and situations. But let's go back to that 6-month expectation. That's what a lot of the policy has been framed around. If we go back prior to this ever existing, and I think for me personally, as having dozens of tenants in my own portfolio, one thing that I've always really wanted to make sure, and I've always been, is quite an accommodating landlord. And when I say that, by saying that, I mean that if someone comes to me with a realistic request as a long-term tenant of mine, or even a short-term tenant of saying, I need to get this fixed because this is a problem with this property, or it's unsafe, or it's not functional, or it's not part of what I paid for as part of my rent, I've always been someone, and I always advocate for other clients of ours at Pure Property Investment, but also investors in general, to be accommodating within reason. So your tenants become people who are considerate to you as your landlord. And what that ends up doing is breeding a whole ecosystem of people respect that it's a give and take situation. And they should then, hopefully, in this situation, I can reflect on my own portfolio. I've had 0 requests of any issues with regards to rent reductions, etc. Because A, my property managers, I feel like I've picked the cream of the crop there, but B, over time, I've made sure that I'm going to be quite a considerate and compassionate landlord as well. So I've done the repairs when needed. I haven't pontificated. I haven't kept things dangerous. I've made sure that rents have been adjusted accordingly and been quite, open-ended to ensure that everyone's winning out of the situation. In these situations now, when you've got a little bit of a short window of hard times, you don't get those requests of people being hard-nosed and saying, bugger you, I'm not paying my rent because you've been a bastard of a landlord from the outset anyway, so I'm going to stick it to you because now I've got all the power in my favour.
Yeah, it's a really good point, that, Paul. And let's go to a quick break. But when we come back, I want to chat about effective property management relationships. And I think there's some good tips there that we can share. Back in a moment.
Worried about making the wrong choice with your next investment? You're not alone. If you truly want to become the master of your own lifestyle design through real estate, then you need to speak with Buyers Agents, who'll help you acquire cash flow positive properties in high growth areas with value add potential, so you can create more freedom in your life. Visit dash.com.au/SPI.
Welcome back, everyone. Phil Tarrant here with Paul Glossop, Managing Director, Pure Property Investment, buyer's agent, buyer strategist, buyer's everything these days. You're probably more of a
buyer's agent of the year. Buyer's agent of the year.
How's your role changed through this, mate? I know, look, you're highly regarded for the work that you do. And we're really fortunate in Australia is that we've got this, we've spoken about it before, this sort of cadre of really top line buyer's agents and property strategists. And it's an emerging sector. And I think, in many ways, buyer's agents in this whole industry will really find its level of maturity during COVID-19 when people start sort of leaning on you guys a lot more. And I can think of a number of businesses. We know them all really well. I have them on the show as guests. You're the buyer's agent of the year at the REIQ Awards, which is the big awards for real estate back in 2019. So you're good at what you're doing, but I imagine your job's changed a lot, right? You're a counsellor these days.
Yeah, absolutely. And this is the reality of, I think, where our role and what I think our role always has been, but potentially not leveraged on as much from our clients and from potential future clients, as well as asking those questions about what happens now, or what if this, or what if that, or how do I handle this situation, and things that were fanciful to even discuss only 3 months ago and now becoming the reality of this is a situation that we're in, here's what we need to consider doing. And our role is both, I think, as much now, at least in the short term, on managing finances for anyone who's been affected, right through to how to take advantage of a situation that's presenting if you are in a position to actually take advantage of this as a would-be next property investor as well. And then in between, the rental situation, which we're all in discussion of today. And I think what is going to, and already is impacting every landlord out there, is how to make sure we're keeping everyone happy, how to stay on top of things, how to make sure you understand the policy, what your rights and your responsibilities are as a landlord. And that's what I've last count, I think over the last 4 weeks, my calendar unfortunately has been booked out for the last 6 weeks straight. And I'd say that includes about 18 to 20 meetings a week. And a good portion of those are new clients, a good portion of them are existing clients, but a lot of the discussion on any of those fronts is about what happens or what's happening with their existing portfolio, how to make sure that they're getting the best debt structure for maximising their cash flow returns for now and for the future, because that's probably a touching point now where not only if you think of the next 3 to 6 months, but thinking of what's on offer for the next 2, 3, 4 years, there is some amazing situations which I'm seeing some of our clients all of a sudden become opportunistic within, both maximising their cash flow, looking at next investments. But yeah, holistically, the advice piece and looking at and drawing on my own personal experience and my team's experience of about 45 years worth of long-term property investing experience comes into the throw, rather than just talking about you should look at buying this type of asset. Now it's, okay, in this situation, here's what we need to consider. And that's our role. We catch up with clients every 6 months for the life of their properties. And that's part of the service that we have to provide. And that's whether they're having a next child, whether they're made redundant from a role, whether they're looking at building their portfolio to the next investment, right through to developing, building granny flats, selling, everything in between. There's so much to discuss.
Yeah. Let's have a quick chat about what property investors should be doing. And we'll chat about the market in a moment. We've only got about another sort of 5 or 6 minutes. But if you're a property investor with more than one property, say you've got a portfolio of properties, what should you be doing right now? Say we're recording this on a Friday arvo. We're coming up to the weekend and I'm looking outside. The weather looks beautiful, by the way, and you're not allowed outside.
It's been amazing.
Go get the next side. But, so say if you could put aside 2 hours on a late Saturday afternoon with a nice glass of Chablis and a bowl of chips, and we're going to work on your property portfolio, what would you do?
Just to make sure everyone's aware, because I'm sure as of knowing exactly what you drink on a weekend, just so everyone's clear, Chablis is, I believe it's a French blend of somewhere between a Chardonnay and a Champagne. Is that correct, Philip? Because I know you drink a lot of
champagne. It's close to a Chardonnay. I don't drink.
You just buy it. You just hoard it in your multiple cellars.
Put it in my stuff. It's my diversification strategy, right?
Yeah, of course it is. This is it. I know you drink a very, very old wine. I think if it's not over 100 years old, it's not of interest to the Tarrant household.
So you got 2 hours late on a Saturday arvo. What do you do?
Yeah. I think the first thing I'd be doing right now, and I personally am already doing, is looking at where my debts sit right now. So understanding both my debt structures, are they fixed, are they variable? Understanding am I in a position where right now I should consider thinking about what the next steps with both my finances are? Because without knowing your finances, clearly you're not buying your next investment or doing anything from a property perspective anyway. So for me, that's probably the opportunity right now. And it might not have to even be a Saturday. It might be any given Sunday. It might be any time at all, because we've got probably a little bit more time to do these things because we don't commute as much. Take that away, we've probably got a few hours a day that's up our sleeves. So for me, understanding that, tightening the screws there, or asking the question to your broker, your bank, or even getting in contact with us. Look, we're more happy to sit down, and a lot of the conversations we're having about current finance structures and strategies to then have a discussion about things that people might be able to consider doing, because I'm not even looking at it to say there might be a few $100 left, right and centre that you might be able to tighten. I'm talking the vicinity of $5, $10, $15, $20, $30,000 difference per annum net in portfolios that have changed between where things were 2 or 3 months ago to where things are right now, and also where that's going to affect your cash flows for the next 2 or 3 years. So if I was going to do anything and spend a couple of hours over the next few weeks, I'd be saying consider and have a look at where your finances sit. And if you're unsure of what the best structure is on whether it's releasing equity, whether it's sharpening your rates, whether it's looking at switching or refinancing, or a combination of those things, give us a hit up or give us a call or jump on some of your websites, Phil. I know you've got some really good access to really good calculators and other things as far as experts are concerned. But for me, that is probably step one. And once you're at that point, then you can start to think about, okay, well, what financial position are we in versus assets, liabilities, and then looking at what next steps are from there.
Yeah. So we laughed about it, hoarding wine as a diversified investment strategy. And, we talk about being a bit silly there, but diversification in any portfolio is key. And I'm not talking about diversification of property or regions. I'm talking about different asset classes. Most of us hold shares in some way or other financial vehicles via our super funds, whether they're industry funds or retail funds or self-managed super funds. And I've got a retail fund as well as an SMSF, but that's taken a bit of a punch on the snout recently.
Yep.
So it's good to be diversified, but when you see sort of this whole wealth effect has psychological challenges for everyone, right? When you see your net worth going down. But let's just chat about property quickly, Paul, because, versus other asset classes. I'm not getting any rebates on my wine collection. I'm not getting any rebates on my antique book collection. My superannuation's been hammered, but I've got a property portfolio as well, right? And that's not doing too bad. So as an asset class over time, property has performed well. It goes up and down, and there's graphs galore around this. Go and check out smartpropertyinvestment.com.au. But it is the one real asset class that the government has decided to really intervene on, some for the good, some for the negative. And we look at some of this stuff coming at REIQ, I'd say it's quite negative. But the government's intervened because as an asset class, it has a lot of utility versus other types of asset classes. And that is keeping people in shelter, right? So the government's got right behind this. My concerns are right now, and the discussion is if you can afford to buy property or invest in property, you should do, right? But do you have any concerns of this current market? Are we going to see this 20 to 30% wholesale drop in assets over this period of time as Australia enters recession with unemployment that hasn't been seen since the Great Depression? Or do you think it's going to be buttressed from it? I'm still trying to work it out myself, and I haven't landed at a position.
Yeah, look, I mean, but I think it's the question on top of everyone's mind as far as property investors, both who are in the market and potentially people who are potentially wanting to think about getting in the market. Look, I agree with you. Like the things that are obvious in these times, and it was very similar during times like the GFC, and it's been very, very similar scenarios during any other times where you've seen major financial change in both the equities market and recessions, and even going right back to the Spanish flu, when you've got data that's obviously a little bit more patchy data, but that's essentially 100-year ago data, and what happened to markets. And the things that were obvious then is that what happened throughout that whole time, and nothing has changed. And this is the very, very unique thing about property, is that it remains a necessity for literally every single person on earth. Is that if we aren't buying property, essentially we need to live in a property, we need shelter, and that shelter typically comes at a cost. But it also means that it's going to be very, very important utility for government to make sure people have shelter. So ultimately, you've got a whole ecosystem which is designed to support people getting in property and retaining and sustaining their ability to stay in that property, whether they're a tenant, whether they're owner-occupier, whether an investor with multiple properties. So that hasn't changed. And I think some of the things we've seen pretty much immediately, and that the economic fallout from COVID-19 has been some of the really early stages, is how to make sure that the banks are in a good position, first and foremost, to be able to support their investors and their owner-occupiers, as well as tenants have got the income to ensure they can continue to pay their rent. And that after this short-term temporary issue that arises and then passes, where are we going to be to ensure that we can continue to thrive in that property space and continue to have property as a cornerstone to the economy? So that hasn't changed. And if anything, that's probably just been more highlighted or heightened. But when it comes down to what's going to happen after, my personal position is, look, you mentioned at the start of this podcast, there's been 300,000 people who have exited Australia temporarily to go back to their motherland, because that has been the message from government that they need to get out, so then they can therefore get back in once everything's passed over. But the other thing that's already happened is that we've seen a huge drop in both approvals, which will then result in a huge drop in future supply. And what happens in these downtimes is that you see developers walk away from projects or walk away from approvals. And we're already at about 40% drop on nationwide approvals from 2 years ago. That's going to reinforce the fact that we're going to have a far, far bigger shortage in supply in the next 2, 3, 4 years. And by that time our borders reopen, we have that ongoing 1.6 to 2% population growth demand. We've got a deficit in supply. We've got a short-term time frame here where we might not have that same demand, but at that same time, we've seen interest rates drop to 2.5%. We've also seen the 3-year bond rates are now at 0.25%. So we know that this is going to be cheap money for a good wedge of time as well. So ultimately, if you're holding property, it's not a great time to sell property, but it's also a great time to hold property because your cash flows just increase exponentially. Sure, you might not get 30, 40% growth in the next 1-2 years, but you're most certainly going to see better cash flow for the sake of your income, or your actual cost of money's gotten cheaper. And I think the 3 to 5 year fallout is that you're going to see baby boomers who are going to have cash in the bank and know where to spend it, and going to look at, again, the share market, same as the fallout of the GFC, being quite turbulent. So they want to see a return on their money. And as of only literally an hour and a half ago, I got off the phone with a retiree who's got a good war chest of cash, where they want to see a consistent income, looking for a very consistent rental investment, which is going to be something that just provides them a steady income ongoing. And it's going to be far higher than what they're going to get in any fixed cash rate in the bank for the next 3 to 5 years. And we're also going to see first home buyers coming out in droves, which is already happening. So I think they're the things to expect. Is cheap money's here to stay for a good wedge of time. Supply is going to drop off very, very, very quickly, and I think it's going to be a relatively long-term supply issue. We're going to see a temporary issue with regards to demand on that 300,000 people exiting, but we're already running at about 2% population growth. We might drop down on around about 0.1 to 0.5%, but we're still going to see a deficit in the amount of supply that is there for the relevant or equivalent demand. So for me, the ecosystem of property looks probably better than it probably did only 6 months ago for the next 3 to 5 years, if you ask me what's going to happen in that time frame.
Yeah, and I think it's an important point. I'll conclude with this remark, and that is, just be very careful in your decision-making right now. Don't make knee-jerk decisions for what might be 3, 4, 5 months when you consider the long-term game in property investment. And property is a game of time, right? So don't let the decisions you make now impact your ability to create wealth in the future. So if you can hold on to your properties, do everything you possibly can in order to do that without putting yourself under too much stress or pressure. I'm sure you can cut away other things before you start cutting your property portfolio. And that would be my recommendation. It's not advice, because I'm not allowed to give it. And I wouldn't listen to me anyway. I'm just a journalist trying to have a bit of a narrative around stuff. But that's pretty fair counsel, isn't it, Paul?
I would 100% agree, mate. Is that, as I said, the first things that I'll be doing, if you are thinking that you need to pinch pennies a bit for a short period of time, I think the first step is to say, where are your finances at? Where are your loans at? And getting all of those sharpened up in the next 3 months. Because it's not just a 3-month thing that I think you can improve. It's probably the next 3 years you could dramatically increase your cash flow. So take that as your first step. Give us a Hoya or set up some time with myself and my team if you do want to have a chat about that specifically. I'm more happy to go through that with anyone in particular. But I think before any knee-jerk reactions, to put a property on the market where you've got a very limited amount of buyers, you've got to always beg the question is that should be your last resort over the next 2 or 3 months. And really the last resort shouldn't be the case, because if you are in that position, your first question is, we'll go to your bank and look for that mortgage freeze for 6 months. That's on offer. So that shouldn't even really necessarily get to that.
Yeah. And if you struggle getting a hold of Paul, you can contact the team here and I'm sure they can loop you in. You can email editor@smartpropertyinvestment.com.au. We're happy to sort of do an intro there if that's what you like. Paul, thanks for your time today, mate. Very detailed. Let's keep at this. It's really good. Property investors are hungry for info right now. So much like some of our colleagues in this industry, appreciate your time and effort, sharing your insights and how experienced you are in this regard. So thanks for your time today, mate.
No, you're very welcome, mate. Thanks for having me again.
Nice one. I hope you enjoyed that, everyone. We'll keep at this. You know, it's 24/7 for us right now in property investment. So keep connected, keep engaged. Make sure you follow us on Facebook or Insta or wherever you like to get your social media stuff. So when you're sitting there multi-screening at home, watching Married at First Sights and pulling your hair out because of the most miserable show on TV, you can read Smart Property Investment, just Smart Property HQ. You can find us there. The email, you can receive that every morning, smartpropertyinvestment.com.au/subscribe. Do that today so you know what's going on. And please keep those reviews coming wherever you're listening to this podcast. So I'm getting a real kick out of it. You know, we made a commitment as an organization many, many years ago to back this channel of podcasting. And, you know, it's been a great way for us to communicate with people. And, you know, our remit as an organization is to make people better informed. So being able to do in a way in which is a lot more interesting than a written article, we can put a bit of personality and flavor into these discussions. And I apologize if I offended anyone by calling, what do they call them? No rent.
Yeah.
I stand by that though. But, you know, we can put a bit of charisma into this, and we like doing, I enjoy doing it, but it's just not me here and the many guests we have on like Paul. There's a big team here that produce these podcasts and make the magic happen. So if you can please put a review wherever you're listening on this, we get a real kick out of it. And it's nice to know that during this period of time when we're all locked up at home, that you do have and you are part of a community of property investors and people who are passionate about property as you are, and we'll keep at this. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.